day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Monday, and we're at the 10th of February, 2020, and just getting on to 2 in the afternoon. And if you'll notice, the stock market's taking off a bit. We're looking at soft markets. If you look at my agriculture, I pointed out they're all higher. Bonds and notes giving up the better part of the day, not by much, but they're still higher. There's still the fear element, the safe haven element. So you're seeing a bid, a small one in the yen. You're getting your bid in the bonds and the notes. The gold is higher. Most of the metals are stable to higher. The only one actually lower is the platinum today, and the stock market up. People are going back to work in China in small amounts, but they're going back. Factories are opening. We don't know, we being the world, doesn't know that when you put all these people back into a factory, will the flu spread again? Here's what we do know. The flu is not as bad as the American flu. We get our flus. I had it twice this season. It passes, you take a public transportation, you go out, you get the flu, you get a vaccine, which there is none for this, but the death rate from it is not as large as the American flu. You don't have to believe me, go on the CDC website. I'm not saying it's a bad event. I'm saying that in my head, I'm wondering at what point, just like our flu, it peaks out and the supply chains need to be filled and other things go on. So I'm watching certain markets like the stock market. You know, we had more cases of the flu over the weekend come up in China. We had more deaths, and yeah, it's jumping, and that's a terrible thing. However, it's not picking up in terms of percentage related to the flu. That's important. Is the flu spreading? It is. It's in France, the UK, Canada saying they're going to take a hit economically. The U.S. has had some cases. We haven't seen it yet. At least it hasn't been said that it's in Africa yet. It's going to move on. I mean, if it's a flu, it can move on, and you got to be careful of that. But the gold market isn't breaking on it either. The gold market just sort of sitting here at the 1570, 370 level. Economies of the world are taking a hit. All you need to do is take a read. By the way, if you think about it, what do you think the bar is going to be for companies reporting in the first quarter around the world that are international companies? So their numbers, they're already getting a pass when we get into April and we see the first quarter reporting. You've got to keep this and write it down on a notepad if you can't remember things like that. You can see gold is pretty much caught in this range. Missile day, I'll keep saying it over and over, the correction off of it. And since then, we have been drifting ever so much to the sideways action. Are we trending? We're not. You have a pattern when you put the swing line on the chart. And by the way, this is that chart without the swing line. But the swing line will end up there. You got a higher high, lower low. That is not a trend. Where's neutrality on the chart? I contend it's the 18-day average of closes. So is the 18-day average, and by the way, I had a question over the weekend, Ira, why do I use the 18, not the 19, 20, 21? I've gone through it a bunch of times. I used to buy even optimizing services, and they're still available for each market. Maybe it gives you a little bit of an edge, you think. I didn't find them worth the time and effort. That was my problem. But I had gone back, I had learned charting. I've been doing this since 1969. I actually started charting when I was in high school on my finance team. You know, we all had those when we were in high school, and you do the charts, and I was fascinated by it. And I learned moving averages then. So think of how many years I've been working with some of these things. I just enjoyed it. It was something I liked. I consider that the neutral point, the 18-day average. When you're over it, I have upside bias. Whether it's a 19, 20, I don't care. Be over the average upside, be under it downside. What else? I look at Bollinger Bands because once I learned about them, I really enjoyed the concept that John Bollinger had come up with, that the algorithm will give you a resistance and support point that will keep the market trading within it 95% of the time. That doesn't mean you can't get a burst out of it. You inevitably do, especially from tight trading ranges. But when that comes, number one, if you have your discipline, Where's the bias? If it's breaking out over it, your bias is up. If it's breaking out under it, your bias is down. You can't get away from that. It's why I created my charting course in the way I do. Each thing I teach in it is a filter on something else. So you get 5 filters, and that's how you're trying to put together a trade. Let's assume this market took off to the upside. I'm going to look at 1592.10 as the first major resistance, because 95% of the time the market will trade within it. If the market wanted to break from here and fall down, I'll look at the 1550.180. Now these numbers will change when the market reopens tomorrow, as the day goes on, but they're live during the day and you can get an idea of where they're coming in. In terms of momentum, I use the slow stochastic. Now there's relative strength, MACD. There's a host of different markets you can use. I'm comfortable because it has a personality, and I don't find that in most of the other oscillators of momentum. And in this one, it's pointing up. The bias is up, and I'm caught in a trading range. In the gold-silver ratio, silver is still not gaining on gold. These are the amount of ounces of silver you'd need in a perfect world to go to your store, trade in your ounce of silver for an ounce of gold. So right now, as you can see, it's still staying over the 18-day moving average of closes. Where's the resistance? Duh. Same thing. The 18-day average is always my neutral point. It went up to it these 3 days, can't seem to get through it yet. The support's back temporarily at this 100-day average. It did hit the lower Bollinger Band these 2 days, but then since then, that's been acting better. To turn the market bullish, you need to get up and over 1787.50 right here. If you do that, what's going to happen is you're going to get higher lows, higher highs. If it can stay over 1782, let's call it, the 18-day average, maybe you're putting into play the 1821.5 zone. What turns the market bearish? With this pattern, if you take out 1760.50 and don't come back up through 1787.80, you could end up with lower highs, a lower low, putting 1742.10 into play. The legacy of the swing line is down because it started with lower highs, as you can see, but it's recently shifted to higher lows. So you're narrowing in like that, looking for this market to break out. I'd be surprised if some option traders aren't playing this market and trying to figure out breakouts on either side of it. In the copper market, I look at momentum. The slow stochastic study is bothering the heck out of me. It hung there at 19, and today it's going to lose its embedded reading by just this much, okay? I mean, it's going to be 20.4. 50 point to 100 point break tomorrow could, especially under today's low, because it's so close to it at the end, make it re-embed. But if it stays lost, then I'm going to be looking on my head at least and saying, what if I get a pop into here? That would end the bear trend in the market. So I'm starting to watch the market because I'm watching what's going on with the virus, and I have my own take on it. I'm not a doctor, but I watch markets. And I'm a doctor on markets. And on the markets that I'm watching, I'm seeing people gradually stepping in saying, maybe this thing in terms of market reaction, supply chains, now that factories reopen, something else may be happening. In the platinum market, we have a lower low, a higher high. I don't call that a trend. I have a market that if we look at where the slow stochastics are, today both numbers aren't over 20. It's all I care about. It's not embedded. So I have a market that's staying under that resistance point, and my resistance point is that 18-day average of closes, but I'm not trending. At least the market's not trending. When I say I'm not, I'm interpreting it as not trending. Then we get to the palladium. And we talked about this as the market fell back last week. First support again of that 18-week average. You got under it, you settled under it, and it came right back at you, and that's what it's doing here. Now, to get a bit bearish, I look under the market and go, okay, 2171.30 would give me lower highs and lower low, but support's right against that at the lower band. Is there anything here that can get me out now bullish on the swing line? Unfortunately, there isn't. The pattern, even if you shot up through this high of 2,400, I'd have a lower low, higher high. So I can neutralize, which the market did. The market neutralized the trend. The momentum was down. It's shifting. And the question is, what happens when car plants reopen? Next, you go to the dollar index, and traders are still buying the dollar. You can see if you close like this today, you're going to be up and over the upper Bollinger Band. That's day one. Let's just count backwards. 1 day, 2 days, 3 days. This would be the 4th day right there. On this day, you didn't do it. Generally, you have a real hard time beyond 5. Go count. You'll see what I'm saying. You can get that 5th day. You get it way more than you'll get a 6th day. But I think we're at a zone where you got to be careful. This market's like a rubber band. It's pulled. And the question is, can it just keep zooming, or is it going to run into an area with a Tuesday reversal possibility, some profit taking? You know, you got to put it all in your head, and you're always guessing on a situation like this because you get these viruses, and that's what you're playing. You're playing things that it's a market fundamental that's hard to understand from certain perspectives. And like everything else in nature, unless it's going to wipe out the world, it runs its course. And in this particular disease, China's really done a job of quarantining. I'm not saying they've controlled it with the quarantining, but they've certainly done a heck of a job. One of the elements that I think you use in markets like this, I'm looking at them, are pivot points. And I'm looking at them each day now. And that's because you're not following through to the up or down side. And when you don't, I think the traders are stepping in using different in and out formulas right now. And what you get with this formula is you're going to get a center line. It looks at the previous day's open, high, low, close. And there's a formula you use. It's used the same way over and over. Just about every charting service I've ever seen that's worth its salt has a pivot point in it. Currency traders really like pivot points. I've been around trading rooms with them, and they seem to like them. But on the ones that I see most futures traders use for most commodities, there's 2 resistance points, 2 support points away from a center band. And the traders are saying, if it gets down to the first support, that could be where the market gets a bounce back to the pivot. If it gets up to the first resistance, that could be where it comes down. And then you can put with it, because they're intraday charts, they're not daily charts. You can make 15-minute bar charts. I've seen people try less than that, but 15 seems to be what I've been in the trading rooms with, one of the most popular. And they're going to look at these time frames with it and say, the market's stalling. I can go opposite, looking for the market to slip back to the pivot, and so on and so forth. I explain it in a 3-part video for you. It's easy to grasp how to work with it. It's an art to work with it. So understanding, I don't think it's that difficult. Making it happen for you, in other words, applying it, paper trade. Get a feel for it. That's what I always tell people with all these things. How do you get to this? Go to our website, www.iraepstein.com. You'll see free offers. When you get to the bottom right of our page, sign up for it. We'll send you out the links to the videos. That's simple. It's free. I'm Ira. You have a good day. I'll see you tomorrow.